Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Thursday, November 16th. This will be the last one of the day. I do these videos Monday through Thursday when the market is open. Next week when the market is closed for Thanksgiving, I will not do them. I'll do them Monday, Tuesday, Wednesday. I believe the market closes on Thursday and Friday. Today we are going to take a look at one out of the information technology. Full disclosure, this is one in my portfolio. We did actually cover this one a couple months back as well, but big drop today on this one. Today we are talking about Cisco Systems, again out of the information technology sector. Let's jump right in. If you want to know more about this company, check them out at www.cisco.com. That's www.cisco.com. That is their homepage where I pulled this information from. Cisco helps seize the opportunities of tomorrow by providing the amazing things that can happen when you connect the unconnected. An integral part of our DNA is creating long-lasting customer partnerships, working together to identify our customers' needs and provide solutions that fuel their success. And that is really what they provide. They provide software and hardware solutions, business solutions. They have their hand in AI research right now, cloud computing, cloud connectivity. Every time I log in on my computer, it says, it's through the Cisco login system at my house for my work there. So we use Cisco on our end. I think we have some of their routers, some of their other technology in our business as well. And I'm sure if you work for a large company, they do as well. This one has been around for a while. Since 1984, we have preserved this keen focus on solving business challenges since our founding in 1984. So they've been around since 1984. I was born in 79, so I was 5 years old whenever they came about. Len Bozak and wife Sandy Lerner, both working for Stanford University, wanted to email each other from their respective offices, but technology shortcomings did not allow such communication. And technology had been invented to deal with disparate local area protocols, and as a result of solving their challenge, the multi-protocol router was born. So that's where they started, right? That's part of their hardware portion, routers, that sort of hardware that they provide, but like I said, also software as well, applications and login, certification logins, that sort of thing. So let's keep rolling here. And the reason we are taking a look at them, huge drop on the day, 9.83% down on the day, close out the day at $48.04. We are talking about Cisco Systems Inc, ticker CSCO. They did miss earnings. I did catch that whenever I was looking this up. So that is part of the reason for a downturn right here. And I don't mind that. If the rest of the business is sound, this is actually a perfect opportunity whenever they miss revenue or earnings beats. Depends on how much and what the reasons were for the miss, right? But I like to use these earnings time, especially if there's a lot of, there is a lot of volatility around earnings. So that is whenever I like to look at these, especially because sometimes they'll drop, but the business is still sound and it's a good buying opportunity. Average volume of 17 million here today was 77, and a big sell-off, right? That tells me a lot of people were getting out of the position. I notice here that they did not have 081. They did not have a beta here, but I believe that I can find that real quick. CSCO stock. Let's see if we can see that real quick. I'll keep going while I'm looking for it. Market cap of 194.588 billion. Again, beta was not listed for some reason. Price to earnings ratio $15.65 per share. EPS $3.07 per share. Stock analysis. Sorry, I'm looking something up right now to see if I can get the beta. Here, earnings date February 13th to February 19th is the next one. Forward dividend yield is $1.56 paid out on the year. Here, let me see if I can find this. CSCO. And it looks like, oh, come on. Where is it? EPS, forward, PE. Beta 0.96. So here, according to stockanalysis.com that I've got pulled up on my phone while we're going through the video, beta is 0.96. So it is just lower than the overall volatility, and that speaks to why I look at more than one source. Ex-dividend date October 3rd. Looks like they paid out on the 24th. And according to Yahoo Finance, they have a one-year target estimate of $53.34. I am not affiliated with Yahoo Finance, just one of the sources I like to go to for information. Now I like to get into the statistics here, and I like to get into the statistics regardless of what source I'm using. On this particular site, I like to look at dividend yield theory, and to do that, we look at their 5-year dividend yield average, 2.97. We compare it to their current, 2.93. And since it is a little lower, that speaks to some potential overvaluation, though it is getting close here, so maybe a bit more of a pullback and it'd be in fair value. But right now, at $48.04, looks like they're at $47.85 in the after hours. It is a little overvalued according to dividend yield theory. Payout ratio is low, under 75% that I look for. It's at 50.16%. So a lot of room to increase the dividend payout, pay down debt, reinvest in the company, make acquisitions, all the things that you can do with free cash flow. They have plenty of room to do that here. Now, I like to go in financials, a lot of good information here as well. You're going to find their balance sheet, their income statement. You can look at their revenue, their margins. Are they paying down their debt? What are their assets to liabilities ratios? Is that increasing? Are their margins increasing? Is their revenue increasing, right? You want to look at all that information and see how a company is doing financially. For this, we want growing free cash flow over time because we want growing dividends over time, and dividends are paid out of free cash flow. So 2020, $14.6 billion here at free cash flow. 2021, 14.7. 2022, bit of a drop down to 12.7, but look up here at the top. Above that, repurchase capital stock, so keep that in mind. 2023, so far, it looks like they're at $19 billion. So overall, from 2020 to date here in 2023, definitely growing free cash flow. And as you can see, they are repurchasing a significant amount of their own shares. And this drop in 2021 can be accounted for by a big jump up. They were 8.3 million shares here, whereas in 2021 they were only at 3.5. So even though it looks like they went down in free cash flow in 2021, you can account for that with the uptick, 5 million more repurchased shares here compared to they were in 2021. So very, very nice numbers overall, except for dividend yield theory saying they are a little overvalued. Again, if you could get them closer to this 52-week low, which looks like maybe where they're headed, then they would be more in line with fair value. And that's where I'll be looking to buy them personally. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. And according to the 19 stock analysts they've had to take a look at this, they call it a consensus buy, though it is right there on the edge of a hold. They have a low estimate of $45, which we just saw would be right against their 52-week low, and that would be a 6.33% decrease from where they currently sits. Average estimate of $60.45. That would be a 25.83% increase from where they currently sit. And if it happened to hit their high of $100, which seems unlikely, that would be a 108.16% increase in the stock price. All the while, you could collect that nice, juicy dividend yield. And I don't know that I covered that on the previous slide, but we'll see that here in a minute. Now, I like to get into the statistics here. They show you the same information. They do go back a little bit further here on stockanalysis.com than Yahoo Finance does. Part of the reason that I like them, I can go back further in time. They show the information a little differently, like this forecast right here. I really like this. But I get into the statistics here and look at return on equity and return on invested capital. I like 10% or better. Return on invested capital here is 24.88%, so above the 10% I'm looking for. And return on equity sitting at 30.04%. Very nice numbers overall. The company is very good at reinvesting back into itself, into research, into making acquisitions, into building out factories. Whatever they're doing with their free cash flow, they are doing it. And buying back shares, they are doing it very well. I also like to look at the forecasted earnings per share growth. I like 5% or better. This is at 9.92, so that's almost twice what I'm looking for earnings per share growth. Very nice, and revenue is projected to grow over the next 5 years at 3.51%. Very, very nice numbers overall. As I stated, I do own Cisco. I am into it for 168.32 shares. My cost basis is $49.79. So I do not mind this pullback here. That gives me an opportunity to add to this position, decrease my cost basis, increase my potential future returns, and increase my dividend yield. So 2.65% dividend growth. Payout ratio is at 50.81. As we saw, 50, so low payout ratio. I don't think I covered the dividend yield theory, so I've got it up on my phone here. Let me give you that real quick. The dividend yield on this one, where is it? Dividend yield is at 3.25%. So nice dividend yield, starting dividend yield over 3% with a 2.65%. So not growing the fastest, but it is growing over time. And with a low payout ratio like this, they have plenty of room to increase that over time. Now, went back to 2020, they were paying out 36 cents. 2021 April, they raised it up to 37 cents. April of 2022 up to 38 cents. And April of 23 up to 39 cents. So it's about a penny shot. I'd really like them to increase. That's where you're getting that 2.65%. I'd really like them to increase that with such a low payout ratio. But I get it, being a tech company, they need to keep some room to invest back in the company, invest in research, make any acquisitions they need to. So it does make sense, but I do like the growth. I do like the starting dividend yield over 3%, 3.5%, right around there. So this is one, like I said, below my cost basis. I'm going to probably looking to add to this one over the next couple weeks. If it remains down here under 47, I'd really like it back there in the 45 range. They do pay out in the January, April, July, October timeframe, so I like that as well. And let me know what you think of Cisco Systems. Is it one in your portfolio? And this is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing. Just like we just walked through there, you can walk through the same thing. Don't just steal my stock screener. Make sure you're creating your own based on your metrics, what you're looking for. I mean, you can tweak this one if you like. You know, maybe you want a 5% return on invested capital or 15%, or maybe you like 10% earning per share growth over time, right? I also add in price to book for financial companies like banks here. So it must meet 5 of 8 if it's not a bank. It must meet 6 of 9 if it is a financial company like a bank to be investable. And then I do more of a deep dive if it makes it into that pile. So this is a way I'd create basically my watch list. And then from my watch list, I would do more of a deep dive, really get into the financials of the company, and then do a discounted cash flow analysis to see what I'm willing to pay. Well, that is it for this one. Let me know what you think of Cisco Systems. Is it one in your portfolio? Is it one you've had your eye on and looking to invest in? Is it one you're avoiding altogether? Maybe there are other technology companies you like better. Let me know down in the comments section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and work it into the comment section down below, and I'll work it into the rotation. I do have some out there from a subscribers race, which is a Ferrari maker. I've got on the books to do a couple other ones in the pipeline right now. So again, don't be discouraged. I will get to them eventually. There are just others like this one, that big drop on the day, 9%. I'm going to take a look at that on any time I see, especially a company that I own drop by 9%. I'm going to see what's going on there. This one overall, short of it needing to pull back a little bit more, and even under $49, I'm looking to buy under my cost basis. So this is one I am interested in adding. And the numbers all look good to me. I don't mind paying around fair value for a good company like Cisco Systems. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't money to never invest any amount you're comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.